Good afternoon, everyone. BC Richfield here, coming to you live from London. It has just gone midday here, making 1100 UTC. Big shout out to everybody joining the stream live today, and for everybody that's obviously watching this on recording as well. Hope you are all well. Middle of the week, we're going to make some time to look at some alts today, but going to start with Bitcoin, kind of continue our narrative through from last week. We've had a flurry of bank holidays, public holidays here in the UK. Of which we shared the one on Monday with, I know we shared them with our Dutch friends, some other Europeans, and also Memorial Day in the USA. But it's been, because of the King's coronation here, it has been interesting. Basically had 3 bank holiday Mondays in May, which has obviously cut my live streams down a little bit this month. But we'll be back to 2 a week as normal, Monday being focused a little bit more education on Bitcoin, and then Wednesday more and all about the charts. Whack Shah, my friend, how are you doing, buddy? How is the weather with you? I think we've got a bit of your beautiful tropical sunshine our way at the moment, which is always a treat. Let me just make this screen full so we can see. So just waiting for a few more people to come in, guys, but let's crack on anyway. People can always come in and catch up. Do remember, ask any questions if you've got any. Imran Khan, hey, buddy. Good day to you too. Yeah, questions are very, very welcome in the chat. All I ask is that you just be respectful of other people and their questions as well. They might be asking something that they've not known before that you've heard. Always try and help out fellow traders. All right, guys. So with that all in mind, let's take a look at where we are. So on a weekly scale, Matthias, hello, my friend. Good to see you. Excuse me, sorry, a bit of a hoarse throat this morning, so it's dropped a couple of octaves. So look, weekly really, really similar for me at the moment that we've been looking at. I know weekly obviously doesn't move particularly fast, but still feel like this order block here is capping the market to the upside. Right, I did think that we could maybe start to make a run on this high here, but to be honest, something I always look at with order blocks or fair value gaps on any kind of level. Good morning, Dimitri. Is looking at this, right? So looking at the midline, the EQ, yeah, the threshold of this. So when you look at this here, there's nothing to kind of, there's nothing kind of pinging up above it. Burned, my friend. Craig, stuck on a work call. I have to catch up later. Aha, no worries, buddy. Hope it goes well and quickly for you. So, look, we didn't make any real progress above this. I know even on a weekly scale, we weren't getting anywhere near any closes up here. So it shows to me that it's a little bit of a stronger rejection. We've now come back underneath. I mean, to be honest, I thought we'd started to stall here a little bit, right? But these ended up being, when we got these longer upside wicks, that they all kind of turned into doji candles. A bit indecisive, price coming up into this area, quite simply, run above this prior high, taking the liquidity, and now we're starting to break down. Obviously, on a weekly scale, it's really important that we remember that we're still bullish, right? So we can use BPRO to help us out with that as well. I mean, BPRO obviously kept us bearish all the way down to here. And we've been bullish since, right? But we have to remember it's very, very aligned with the time frame that we're trading on, right? So the fact that we're on a weekly chart now, it's no good kind of looking at the weekly and saying, okay, no problem, we're still bullish on the weekly, dropping down to an hourly chart or a 15-minute chart and just start banging out longs, right? Typically, that's not the way to do it, right? You want the context from the time frame you're trading on, a higher time frame, to get your high time frame bias, but that has to correlate then with your medium time frame and ultimately your execution time frame. But it's always good to get a top-down view. So when we're looking at Bitcoin here, we've got the weekly order block capping the market to the upside. We've got the weekly fair value gap down here, which, since all the way back towards the end of April, we were looking at this kind of being in the draw on price to come back down to rebalance this, right? Because actually, when you look at it on a weekly scale, Bitcoin's been really bullish since since the start of the year, really. Really started to pick up in January. We're holding this structure and we're pushing higher. Now, I'm really going to zoom in here because I want you to see the range that I feel is currently kind of capping the markets the upside downside. We've got the inside bar pattern, right? 2 candle pattern where we've got this candle, where the first candle has to be the larger of the 2 candles. The second candle on its close, remember the pattern doesn't become valid until it closes, has to be within the realms of this. Yeah. So that low can't be lower than this low. That high can't be higher than this high. When that happens, this becomes our mother bar candle, high and low. this becomes our inside bar high and low, which is what the IBH and the IBL stand for. All right. Now, when we're trading these, we trade them like we would any other range. Okay. Meaning that if we come out of the range, excuse me, and we deviate, we get back in the range, then we look to trade it to the liquidity of the far side of the range. Yeah. So if we run this high here, we get back underneath, we're then targeting this low, right? Via the midline, which we would draw in. To give you an example of that, right, I'll draw this one in just so that we can look at it on the lower time frames. Look what we've got here. This doji candle plays out as our mother bar. All right, and then we obviously have the inside bar as well, which I'll do slightly thinner. And this is just to show you the principle of what we're trading when we trade a range, right? You can get them from mother bars, your inside bar patterns, your mother bars and your inside bars. You can get them from a dominating candle that's taking the space. You can get them from expansion ranges, which I'll cover with you guys shortly on lower time frames as well. Ranges and why sort of I trade level to level, and I think some of the very best people out there do, like SZ, Trader Dank as well. These guys who are really, really exceptional at trading ranges, is because it makes sense to me that that's where price works well. You know, if price is looking to get acceptance above this level and it fails to get acceptance, it comes back underneath, the sign of weakness, price often then purges down to find a prior level where there were buyers, right? But also where there's liquidity. Below all the lows and highs and liquidity resting stop losses of people that were short and long there respectively, as well as breakout traders, right, looking to catch that expensive move higher or lower. Larger accounts can use that liquidity to fill their positions, right? And that's the basis of what we're looking at in terms of our trading. So here we can see we have our mother bar, inside bar. Look what happens, right? Price runs the higher, yeah? Ultimately then opens here, fails to push higher, comes back down within the range. Then we ultimately target where? The far side of the range here, which we took out with this candle, all right? So that's just to show you that. We drop down onto a daily scale now. We can see our current, obviously, mother bar here. And remember, these are the inside bar, just abbreviates the IB for inside bar, and then H for high, L for low, all right? Now, let's look at the previous one as well, again, to give us the context. This ends up being, I'll try and draw this in, but it's often awful on the higher time frame. That's all right. This is our deviation, right? Price gets back underneath, within the range. What do? We trade it to the far side of the range, yeah, here, via the equilibrium, right? So we would take our Fibonacci here, from the high to the low, right? Now, if we actually, let me draw that EQ in for you. It's just the 50% of the move, right? But it's so often, let me just make that bigger so it stands out. Right, you can see just what a key player it is, right? Price ultimately is holding this level so well over here, right? Then what happens here? Price gets back, closes within the range. What do? Target the far side of the range via the EQ. What happens? The EQ holds price here, yeah? Price ultimately gets back above this, showing strength, runs back to the highs here, yeah? We get the deviation here. Where to? Back to the midline, right? What happens then? Holds the midline, moves higher. We deviate the range high again. This time we come back underneath, and look at this. We close underneath the midline here, right? Ultimately purging price lower, which takes out the mother bar low right there, all right? So that's the principle of what we're looking at, okay? So now when we take the context of that and we overlay it with the current price action. Nip, good afternoon, buddy. Sorry, didn't see you sneak in there. Yeah, it has been a beautifully sunny weekend, been and gone here in the UK. Hopefully for everybody, all of you as well, around the world. I know I'm very blessed to have people tune in from all over the place, and being British, we do love speaking about the weather. So here we are, daily scale, mother bar high, mother bar low. What was my expectation? Well, we didn't run the mother bar low. Yeah, we haven't run the mother bar high. And again, let's look at what we can see here in context, right? Price came down. This our inside bar was set on the close of this candle, right? You can see the clean high, the clean low. What happens? Price deviates the low, yeah? comes back in. Look, nice kind of pin bar candle here, closes back within the range. Expansion here. Where do we target? The far side of the range. So this is our inside bar range, right? So now, where are we, right? We've that's awful. Sorry, trading view. Either that or my laptop's running a little bit slow today. Let's have a look. So run the high. We're now back in the range, right? So let me get rid of those because they are pretty ugly. And now we're going to draw in our midline, right? So this is our range high. This is our range low. This is our mid. Okay, so we can now see, just get rid of that, make that a dash line here. We can now see here that that's exactly what price is interacting with, right? So what else does this tell us? We've run the higher. I did feel like once we did really kind of expand out this, I thought we were going to tag them other bar higher, to be honest. And we actually missed a really, really good setup yesterday for a short, which was my fault because I was on a call with a really, really interesting crypto firm, actually, who are looking to make some waves in the space. So hopefully tell you some more about very soon. But it doesn't matter. There's always trades, right? There's always trades as long as we follow our system. We've deviated. We're back in the range, right? On a daily scale, this didn't really give you much here because, look, we failed to close back within with this candle. And to be honest, we still don't know, right? This candle could completely recover and close outside of the range. So what would my setup be if that was the case? If that were to happen, we were to come back outside the range here, I would see it as this, right? I would see it. The price has come down. Look, we come down, low, higher, high. Are we coming in to set a higher low here, right? Can't be discounted. Here we've got our daily fair value gap, right? So if you're in the habit of marking these up, yeah, I just mark it like that. Fair value gap and then a lowercase to show if it's daily, 4 hour, etc. Right? Because then as you decant down the different time frames, you can remove them. You can kind of take them off the charts because by the time you get to, say, a 15-minute chart down here, that's basically your whole screen, right? I mean, look at this, the big grey area here, which is our, weekly fair value gap. So we've now come into this and we've definitely currently trading below the mean threshold or the 50% of this, right? So let's look at what confluence we've got, right? We've had a big expansive move higher. We've deviated the range higher. We're now back within the range and we're holding at the midline. So what plays can we ascertain from here, right? If we drop down to the 4 hour, right? Let me just turn session breaks off, actually, just clean that chart up. For anybody that's interested, I really like trading prior days high, prior days low. You very, very often find that there's liquidity resting there that gets targeted by some of the larger accounts. So it's always a good thing to watch. Have a high time frame bias. And for me personally, I'm looking to hold that high time frame bias. You can use, an awesome indicator, something like BPro, to hold you in that. So, BPro held bullish all the way through here, right? So you can hold that bullish bias. We now closed below it here, right? So we're now starting to shift bearish. Also as well, look, higher, 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 low, lower, high, break of this low, yeah, now means that we're in bearish structure, right? This is on a 4 hour scale. Always worth, or can be worth, sorry, it's totally up to you guys, marking that level up there. We've now got this 4 hour fair value gap forming on the close of this candle. Price, if it is looking to move deeper, could look to retrace up into here before purging down lower. All right. But purely from our price action perspective, right, I'm just going to get rid of this fair value gap on the daily there as well, right? We're in that. We've purged through it. Imagine we're going to, come down and fill that. We're being held at the midline. So what could we look at in terms of setups from here? Well, quite simply, if we hold this here, yeah, for a little bit longer, and on the lower time frames, we get back into a bullish market structure, that's when we can start looking for longs, yeah? We'd be looking for longs here. We'd want to see a low taken out here to generate some liquidity. The high here broken, yeah, with an energetic move showing that buyers have stepped in. And then we can look to be buyers ourselves here, right? Targeting, first of all, the inside bar high, but also knowing that if we do get the momentum that we could be looking to target the mother bar high as well, right? Now, the great thing about trades like this is you know exactly where you're wrong, right? So you've got a clear point of invalidation, which is underneath this low, right? Then say we do play that, we get that, the market dupes us, it comes back down below here, yeah. Well, then quite simply, we're looking. Oh God, sorry, I need to delete that. That's hideous. Simply, what we're looking for here is the similar. If we take that trade, price reverse on us stops us out, no problem, because we're a lot more confident than when price goes below here, right? That if we get a similar kind of thing, right, then we think that price is then quite happily going to be searching for liquidity lower down. We can wait for that low, clear out the liquidity below them, right? We then wait for a break of that low, right? Because we want to see this liquidity taken out first of all. Yeah, if we set some kind of equal lows there, we do hold the midline and we do push up from there. Undoubtedly, there's going to be a lot of stop losses below there. So there's a chance price gets driven down into those, yeah, to trigger all of those sell orders, to fill larger players' buy orders. What gives us a little bit of confirmation that that's not the case is that price runs down, takes out that liquidity, sets the lower higher, breaks this low, yeah, and then on the pullback, and we want to see energy in that movement lower, and then on the pullback we can look for entries, ultimately targeting the inside bar low. Okay, so that's my current thoughts on Bitcoin in terms of looking at it from kind of higher time frames down to medium. You know, we can obviously move down to more of like an execution based time frame. Sorry, I just realized I didn't get rid of session breaks at all. But if there's anybody, session breaks can be really handy because it's just these simple little grey lines. You can change them, these vertical ones, right? Just signifies the market's open and close. Yeah. If you want to turn them on or off, just double click in the middle of your chart, go to settings, right? And then under events, it's session breaks. Yeah. So then if you flick that off, you can get rid of them, right? Makes it just a little bit cleaner, or you can pop them back on. All right. I just like seeing it. It kind of sections the day up, right? And you can see then the kind of movement that you've had in the day. So, for example, often if we get a big expensive move during Asia, this was the move here, the start of the day, right, in the Asian session, then London tends to be a bit flat. Yeah. So as we can see at the moment, the London session is compressing. And then we're looking towards the New York AM and PM session. So New York AM session in about an hour and a bit. And then the New York PM session, which happens in the evening here, UK time. It's more likely to see statistically a move in those times, right? But as we are here on the lower time frames, what we're monitoring for here is the market structure, right? Remember, if our theory here is if we're holding these levels, yeah, what would we like to see? Well, there's a nice, you're really bad at drawing these lines, right? There's a nice clean low here, right? What would I want to see? I'd want to see price purge this, yeah, get back above, and then on the break of the high, that's what we'd be looking for there, right? So it doesn't have to look exactly like that, but the key parameters for me are this. A purge on liquidity, meaning we've taken out the stops. A recovery showing strength, so we want to see a shift in market structure or ideally a break in market structure, meaning we've set the higher, higher low. That higher high, that impulse move higher, we're then looking for our entries and entry triggers around a retest of this level or somewhere within a fair value gap that would form in there. Whack! Hey, buddy, sorry, I missed your question there. Do you always take the 50% EQ from the mother bar high and low? What about the EQ for the inside bar? Boom. Brilliant question. No, absolutely. So both ranges, right? So we start with the inside bar. All right. And again, I mean, you obviously wouldn't trade it on these time frames, right? But price is fractal. So if we just click on here and we go down, find ourselves a mother bar and an inside bar, right? And it's basically, it's showing you when price is ranging, right? You've got some indecision in the market. So let's just take this one for an example. Just make that a little bit bigger. Yeah, here's our mother bar. All right, and then this is our inside bar, which sits within it. I'll just leave these lines both thick, guys, because I know we've got that other one in there, so it might get confusing. So ultimately, what we're doing is we're saying when we set that pattern there, right, price runs this, yeah? So here we see it runs the mother bar. So we've engaged the inside bar and the mother bar. So we revert to the mother bar range, yeah? If we'd come up and we'd only tagged, say, this move here, you come back down and we tag the inside bar, then we're looking to just trade the inside bar range, okay? So it's basically whichever one price engages with first. Often, as we see on the bigger ranges, and I will zoom out here on Bitcoin in a second, and we'll take a look at that properly, but what you'll see with the bigger ranges is that price, just turn this off quickly. often engages with the inside bar first. That becomes our kind of key point of interest. So we then look at the inside bar range. And then from there, we're then looking towards the mother bar when those levels get run. So basically taking them as almost a range within a range, mate. Okay. Now, we can see here we're getting a little bit of a bullish reaction. All right. Would I be looking to play this? Not personally, not before New York. Does it mean that we won't get a run here? We absolutely could do. We don't need to take out this liquidity, right? What we could have done quite easily here is maybe there's a lot of buyers here. They've started to step in here. Price isn't going to go any lower. Maybe that here, yeah. Maybe that's the liquidity run on that low. Price comes back up. What do we need to see? We need to see a clear high broken, right? So if this is the liquidity run, we would want to see price come up here, yeah, come back down into here to retest this area. But what we'd want to see, or what I would want to see, is an impulse move here, right? Leaving a fair value gap, meaning it just tells me that price has popped, buyers have stepped in, there's energy behind the movement. It gives me a more high probability setup. What do I think is most likely? Well, I mean, something that's really kind of staring us in the face here and will be on the higher time frames as well, like the hourly or whatever, is this fair value gap, right? Now, price loves to rebalance these areas. So why would I be cautious here? Well, I'd have no problem playing this breakout, but I would be very, very aware of the equilibrium here, right? And I'd be thinking to myself, okay, on the lower time frames, what kind of percentages have I got to play with in terms of day trading this, right? So if we look at it here and we're saying to ourselves, okay, if we run this low, if we break out above this high, yeah. So sometimes it's just a good idea to just draw it out, guys, right? Say to yourself, okay, well, look, if this was our trigger, right? If we've got our sweep, which we've got, okay, price is showing bullish momentum. Now, if price comes up and we get an aggressive close, we get an aggressive breakout here, leaving a fair value gap, and we can return to a fair value gap in and around this area, right? Then my best case scenario, and it may go higher than this, but I really want to know what's going to happen when price gets to there, because if we start rejecting in this fair value gap, I want to be able to have either flipped my stops to entry, trimmed a little profit in order to cover any fees, or maybe even kind of looked at taking profit from target one. So let's just say, for example, that we get this, right? And that's our entry. Our stops have to go below the price swing low. I always put it just a few pips below, just habit really. And then I really want to know that I've got a reasonable risk to reward back to there. Okay, so 2.26R, nice 1.11%, leaving 0.49% for our stop loss, meaning that we're not going to get taken out too much when it comes in terms of fees. Excuse me, which is always an important factor, whatever time frame you're trading on, but especially on the lower time frames, right? Remember, the lower time frames you go, the lower the percentage move, the larger the position size you're going to need to get any meat on the off of the bones, right? But then with that comes higher fees, right? And obviously, remember, if you're using leverage, you've got funding rate to consider as well. So that could be a potential play here today, right? For me, I'm looking towards the New York session, right? I think we've had this big drop here. I like to see price consolidate a little bit. Haven't quite taken out these lows that were set, right? And we can see there's something clearly kind of capping the market around this area, even on the lowest of time frames. So this is still a very, very risky long. If I was looking to take this and I had high conviction in it, I'd still only be going in with half of a normal position size because of the fact that we're countering the high time frame trend. All right, guys. So now we've covered BTC. Actually, let me just pop back up on and show that for WAC quickly, and anybody else that's interested, just while we've got this up. But has anybody got any alts they'd like us to look at? I mean, if not, I can take a quick look at ES or NASDAQ, or if anybody's got any particular alts they'd like to take a look at today. Obviously, a few things have had quite a deep purge. Right, so actually, yeah, let's look at it on the 4 hour. FTM, Sol Goodman, absolutely, my friend. No problem whatsoever. So, just quickly, whack, how I look at this, right? Mother bar, inside bar, right? So, an OKB, please. Yeah, of course, my friend. Right, so, what have we got here? Look, see how this ran the inside bar low, yeah, but didn't tag the mother bar, right? So, what we're looking for confluence here is a strong close above the EQ that's set between the inside bar high and the inside bar low. Yeah. If this had come all the way down and run the mother bar, right, then I would have been taking the EQ from the mother bar high to the mother bar low. Yeah. Here, what we can see on the 4 hour, when we're looking at our candles, we can see the strength. Sometimes, guys, and this was shown to me in my very early days of trading, actually, and it seems really simple, but sometimes it can be really good. Two things, right? One, which is an SC statement that I say all the time, which is small body candles lead to big body candles, right? I think that's a brilliant statement. It's something that a lot of people don't consider. When price is compressing, look at the volume in the bodies. The wicks are where price has tried to get to but's been rejected. So they tell us a very different story, right? They tell us these long downside wicks show us absorption, right? And then we can look for the larger bodied engulfing bullish candles to start to get the momentum pushing up. Like, you don't really want to kind of fade these really strong moves. What you want to do is wait for the breakdown and watch. You can see and watch for the battle between the black and white candles here, or the red and the green, for example. Yeah, you can just see here as they're expanding up. White's completely dominating this, yeah, and then the blacks and the down candles, or the red candles, they'd be normally start to get back in control here. Yeah, these long upside wicks were quite telling that there was that pressure coming down, right? And then we get this bearish pin bar here, another bearish doji. Ultimately, this bearish engulfing is what kind of confirms our fate. But again, quite sneaky, really, because we didn't quite manage to get that close. You got the close on this initial drop. That would have been a very risky short entry there. Would have been looking for this reconfirmation to kind of hold around here. But that's how I look at the inside bar. So let me write a few of these down, guys, right? And we'll get through as many as we can. We'll do it in that. So this is how old I am, by the way, guys. Well, I'm not old at all, but in this space, I feel it quite often. I'm writing this stuff down on a post-it note, right? So FTM, Avax, OKB, and ETH. All right, guys, we're going to cover those four, right? FTM, AVAX, OKB, and ETH. And Lloyd, thank you very much for your question, buddy. Do you hold day trades overnight that haven't yet got to the initial target? It's a brilliant question, that. And one I think that catches a lot of people. Yakuza Kana, because you're on here all the time, buddy. You're a legend. I love you. So, okay, Kaz as well, right? At this rate, we'll be here to about 5 p.m. the way I get through charts. But I'm going to try and smash these out in 30 minutes. So let's see how we get on. But first of all, so we're not going to take any more requests, guys. We're going to look at FTM, AVAX, OKB, ETH, and KAS. But first of all, this really good question here from Lloyd, right, about holding positions overnight. So there's a few different things that play into this for me. And that depends on a lot of context and bias. If I've really got a feeling that price is reaching for liquidity higher up, then what I will normally do, if I'm leaving a position open overnight, the position for me has to be risk-free, meaning that price has to have got to a position whereby I've got my stop loss moved to entry, I've hit at least my target one, trimmed a little bit of profit, and I'm then not concerning myself about the trade. The risk for me, I'm London-based, so I obviously trade London session, but I predominantly trade New York AM and PM, is that you often see these big reversal moves occur in Asia, right? So that can happen. That can just take me out overnight. So if that's the case, for me, I like being risk averse, just making sure that I book some profit and that I've got my stop loss at entry, right? And in terms of that, guys, always work out and know what your exposure is, right? What your risk is. And that means that if you're in profit, you've taken your target one, you've moved your stop loss to entry, you're still going to get charged fees on that position, right? So if you haven't taken any profit at target one, just make sure, or don't actually, but what I do is I make sure that I've taken enough to just cover the fees, yeah? Because waking up in the morning to find that you've been stopped out of a position, fine, can be frustrating, but to find out that you've been stopped out of what was a winning position that you couldn't manage and that you've been charged the fees on top of that, that you didn't cover for, is even more frustrating, all right? So Lloyd, that is how I would play that, my friend. Obviously, swing traders, you have to get comfortable with holding positions longer, but day trades, I like to close them out by the end of the day. Ideally, for me, that's around about sort of the latter stages of the evening in London. Yeah, normally I try to step by about 9, 10 p.m. But if I've got a runner there, then I will definitely leave it open overnight, but make sure that my risk is in control and my stop loss is either at even or in profit. If overnight you get stopped out and then the trade goes to the moon, just don't worry about it, right? You basically that will happen from time to time, but you will also save yourself a lot in my experience as well. Thank you, Imran Khan. Always such a good supporter of the channel. Yeah, and if you've ever got any questions, guys, you can always reach out to me. You can get free trials from the nest below. You get access to our calls for free just through our partner Bybit. We've got an amazing partner in Apex for our decentralized exchanges for people that are looking to kind of take their money away from centralized exchanges as well. And also as well, you can always reach out to me on Twitter and stuff, guys. You know, if you've got any things you'd want me to cover and do for threads, like for example, I know I said this a few weeks ago and I ended up doing a pin bar thread, but I'll do an entry trigger thread for you guys. I find that's something that a lot of people don't kind of share. You know, it's all well and good having the levels, but then knowing kind of entry techniques and patterns can be really helpful as well. So I'll probably do a little series of threads on that, but do always please reach out if you've got any questions like that. Thank you, Lloyd. So I'm going to stop talking nonsense. I'm going to take a sip of my tea and then we're going to smash out some serious charts in the next 27 minutes. Yeah. Right. So FTM, let's start with that, right? And what we're going to do is let's just get rid of everything on the chart when we load it up and we'll do full top down. Guys, typically I'll cover like daily 4 hour, show you what my kind of lower time frame ideas are. But if you've got a specific time frame that you really want me to cover, please do just ask in the chat and I'll show you what my thoughts are on it. But really what I'm looking to do is take this from a high time frame so we can look at how we would look to set bias, right? Also as well, it's always worth making sure that you look at previous. Okay, this is interesting. So this is our mean threshold here of this order block. Yeah, we're allowing for the wicks here because we had the expansive move here, right? What this did was left this fair value gap here, right? So we allow for the wicks on this. If not, I'm typically tend to focus more on the bodies. Price came in, had a nice strong reaction here, ultimately came up to fill this fair value gap, all right, before rejecting. We drew this in here and we managed to hold it. I think we were talking about on the stream how if we could kind of hold this area here, the mean threshold of that order block, right, that we would come up into this fair value gap here, and then we can reassess. And basically what we're saying to ourselves here is our high probability trade is with the trend, all right? The trend here is clearly down, yeah? So as we've come into this level, we've held here. The key isn't to think, okay, we've held here, we're going to the moon. The key is to say, okay, if we hold here, chances are price is going to move up to rebalance this area here, either coming into the fair value gap or attacking this order block, right? So then as we move down the time frames, we say to ourselves, okay, well, let's look for how price reacts when it's there, yeah? So as it comes back into that level, what do we get? Here we can see on the 4 hour chart, price comes back in and we get no real key because we've just not really got enough information on that chart moving from a daily down to that. But obviously when we look here on our 15-minute chart, you could do this on a 30-minute chart as well if you wanted to. What we've got here is the latter parts of the New York session, right? Price is coming up. Now, you see this big move here. If we just turn on our volume quickly. Yeah. Now, not all the time, but you see these larger volume spikes here. This one here correlates with this reversal move here. This move here with this correction here, although it didn't correct any deeper. Don't work on their own, but often if I'm looking for reversals, I like to see these high volume spikes, right? Because in my mind, it's telling me that this move here isn't price just getting super bullish. This is more a manipulation move, encouraging people to go long, getting people to FOMO in, so that ultimately what happens is we take out the liquidity here, right? We run up further into the order block. Then what happens here is we take out that low. If I zoom in a little bit here, price runs up, takes the liquidity, traps a lot of people, comes back down, ultimately loses this low. Yeah. So we've now got a low, lower high, break of structure. We retest this almost perfectly, and then price starts to sell off. All right. So that's how we would be looking to do that. However, hindsight is 2020. We want to know what's going on now. So not really much has changed here for me, right? We've got on a daily scale, there's a couple of lows. Let's just get rid of all of this now. We don't need that. Excuse me. Here we go. So key lows here. Now this is the key swing low. Right, that's where I think price is reaching for ultimately, right? The liquidity resting below there. What it does when it gets below there, We don't know. But again, we approach it with a plan so that if we get down, we purge below there. What we can do is now we can look for setups to day trade, into that liquidity resting lower. Now, it doesn't mean that we're going to get there, but that's where our triggers come in, right? In the same way that we ran this high here, if we run this low, we come back and we recover it, and then we get a bullish structure built. And there's no reason that we can't start to go higher. We did something very, very similar here when we came down. Price ran up, people got super bullish. We ran that, and then ultimately, look what happens. Look at that devastating bearish engulfing candle, right? That day there was a pure example of how price was forced up to an area. Look at these upside wicks, though, right? See the absorption, which was the first kind of warning signs here, along with the doji candles. Then we got this big drop, right? This big drop really didn't give people much opportunity to get in on the higher time frames, okay? So at the moment, we're watching this low down here. That's the key thing for me in terms of the high for what could be drawing price. That's what I'm interested in there. We're not really in any kind of range-bound environment, although one thing to be aware of is the fact that this order block here seems to be doing quite a good job of supporting price, right? But what we can see is happening at the moment is price came up, didn't retest this initially. When we did, look at the reaction that we got here. Look at those long downside wicks, really, really showing that reaction, and price pumps higher. Then ultimately we run this high, we come back down. So now we're back in this realm. Even when we got into here, right, we had a very meek and mild reaction, shows a bit of weakness. Now we're starting to purge down deeper into this. We watch the equilibrium of this fair value gap of the order block as well, But for now, I think the cleaner things to look at are these highs and lows. So if we're then going on here to the 4 hour, what does the 4 hour tell us? Well, if we're now looking the same thing, we want to overlay our same liquidity principles here. This key low's been taken out. We didn't really see too much of a reaction there, did we? When prices come down into that. So price could very well look to maybe just pull back from here a little bit before then ultimately coming down here. However, it could ultimately just continue down, right? So we want to look at what we've got here. If we were to be looking into a trade from here to here, we've still got 2.7% in there, right? I mean, that's more than enough for day trading, more than enough. So the key thing is at the moment that we're dropping pretty hard, all right? So it's a little bit tricky to maybe get into a position here. If we take a look at the hourly, see if that tells us anything different, which it doesn't. This hourly fair value gap would be a lovely place for price to retrace to. Do that so you guys can see it. Now, if we were looking at this as our displacement leg, right? Or we recover here, this is the current drop, this is our high, this is our low. We would ideally want to be shorters from the upper 50% of this range, from the premium of the range. So if price were to recover into here, then for me, what I'd be looking to do is saying, okay, well, I still think the main draw on liquidity is down here, right? We didn't see enough of a reaction at this low. If we'd started to recover here, you think maybe these highs were going to get attacked, right? But if we do recover into this, then what I'd be looking for on the lower time frames, right, is that move, that purge on liquidity, price to break down below it, and then ultimately make a move on those lows, So that would look like this. Price would come up into here. We'd get that purge. We'd want to see price, an energetic move, right, below the low that took the high, and then we'd look for a retrace into here, into, say, a fair value gap, right, or an entry point, either be a breaker, or you can even use the breaker line here, the structure line, and then I think we start to come down and attack that. However, if we flip this order block, if we flip this fair value gap, then these can often be used as support, right? So if we have a really strong move through this and price comes back down into this, and then it starts to really hold here, we can look for moves higher. We've got to be aware of the clean highs resting here. But something else to be aware of here is as price is coming all the way down here, any of these kind of interim highs and lows, this is all stacking liquidity, right? So if it's exhausted to the downside, price can reach up and try and grab into that, right? So for me, on this scale with FTM, I'd be looking for price to either drop further, purge these lows, and then either looking for a recovery above this, So if price comes down, purges this, gets back into here into a bullish structure, right? That's what I'd be looking for in terms of a long scenario. If price gets back down below here, attempts to get back in, but it starts getting very choppy, and then we get that purge higher, break of structure and down. That's what I'm looking for the trigger here. I want to see this hold below here, though. That's important for me. If we see a fast move down and back above, like a V-shaped recovery, often means that price is then looking to move the other way. All right. So that's where we are on FTM. Let's take a look at Avax. Here we go. So daily chart on Avax. Just clear this up. We can see here, look, this low. That was the catalyst there. Took that out into this fair value gap. We got our recovery, but we didn't tag this high, which I was quite surprised at, actually. I thought we would come up into there, but ultimately we kind of rejected this order block in there. So where are we at the moment? What's interesting here is that we've run this low, right? So let me just draw that across. So we took liquidity from that low, and we can see here the stops that are under here were enough, or certainly people closing positions, right? Was enough for price to go up. And we've had this move. Now, what's interesting about this move higher is we've taken the liquidity above this swing higher, right? So I'll draw that in as well. So ultimately, if price manages to hold here without taking out this low, this could still break out into a bullish structure, yeah? Because we've got the low, we've now got a higher high. This would set a higher low, and ultimately a break of this higher, yeah, we move this up to here, a break of that higher would then have us in bullish structure, as long as we don't take out this low. Yeah, so price could afford to move a little bit lower if it wanted to, but ultimately breaking out above there would be bullish for AVAX, right, in terms of a market structure perspective. So if we get rid of that, does this tell us much more here? Just looking to see if there's anything really obvious capping the market. I mean, what I would say is we've taken liquidity from there, but again, these little interim highs here that are untapped can prove a real draw on liquidity higher. On a daily scale, I think we're in a similar situation here. If we get back below this low, so the low that we swept here, but ultimately now this low. So let's move that back to show that we've already swept that one. If we were to purge below that, I think that low is going to tell us a lot, right? If we take out that, first of all, we've got to remember then bullish market structure's kind of off the cards there. We've now set another lower low. However, if we get back within here, then I do think we could reach higher in terms of day trading to grab some liquidity. However, if we do the opposite here, yeah, we come through there, especially if we really come through there with some energy and price just really can't get back above here, yeah, can dip into it a little bit, but ultimately you're then looking for that breakdown, right? On the break of structure, I would then be looking to short, all right, because when we zoom out, we've got this level here, yeah, these down candles before this big expansive move higher. But, you know, this is down at like 12.075. We're currently at 14.1. So there's a big drop there. The other thing to be aware of is this big fair value gap here, right? Yes, we came down and tested some of it here, but the rest of this still needs to be rebalanced. And we could very well see that happen as price purges into this, comes a little bit lower into the origin of this move. So this is the consolidation before the expansive move higher. So you'd expect some kind of reaction here. But ultimately, if we get back below like this, they're the areas that I'm targeting. All right, probably looking at the top of this order block as a key area there. If we drop down onto our 4 hour, just clean this up a little bit. Now, overlaying the same principles, what can we see here? These highs were run, these relative equal highs here were run here, ultimately led to the breakdown, right? On its way down, price took out liquidity resting below the lows, right? So resting below that low, not really much of a reaction. We now have that low to contend with. We call these like inner range lows, right? Because this is the expansion leg. Here, high, low, higher, high, broke out here. We've now broken down bearish below here, right? That really didn't offer much in terms of a reaction. So that's out the way now. This is the next port of call. If we saw price run this, yeah, and then start to regain bullishness, we could look to see if we get any of our long triggers to push higher. I do, however, think that this liquidity resting here is going to prove a little bit too tempting for price, right? So once again, we're looking for these lows to be run. recovery above here, yeah, regain market structure, hold this level, that's where we look for our entry triggers, okay? And the opposite obviously is true if we break down below this. We break down below this and we really struggle to get above, then we want to watch for that break-in structure. And for me, I like to watch out for things that are clear and obvious, right? I know that can sound like a really bit of a cliche statement, but when you're looking at the charts and you're seeing a lot of chop, yeah. So then we've got a prime example here, actually. If we just look over here, right, to this area. Now, looking to short this, right, we can see here we get this move higher. Now, something that is always worth considering, right, is looking at bullish order blocks. Actually, let me draw this in for you. Looking for bullish order blocks if we're bearish, right? Because this bullish order block, if we're bullish, right, price should come up above here, hold this, and then look to move higher. But look how it actually does the opposite, right? Now, I was fortunate to be part of ICT's very early mentorship. Studied SZ a lot, who's just, in my opinion, still one of the best traders out there. And but Michael, ICT, this is where I picked this concept up from, certainly, which is the idea of inverse fair value gaps, right? Meaning that while this is bullish, you can see price making an expansion higher here, leaving this. That is almost certainly manipulation, pushing the price higher to try and generate more liquidity before price goes further down. So how do we play that? Well, we look at these areas for reactions, right? And the other thing that we look at as well is what would be known as a balanced price range, meaning that if we take this fair value gap here and we overrun it with the bearish one that's here, yeah, so this one here, which is the fair value gap in this down candle, yeah, and we're going to do that in purple, then that becomes resistance, right? Price is balanced here, it's come back up, it's found resistance here. That means that it can look to push lower. So we can ultimately see here, right, that that's still ultimately capping price, right? So it's all about finding these key points of interest and then looking for reactions when you get there. I'll go on to that in a second and cover your entry triggers before we then move on and get through the rest of these. But in my opinion here, when we're looking for clear and obvious, when we start seeing choppy moves like this, yeah, fine, we get our sweep here, right? So we get the sweep of these highs, yeah? But then this break of this low, you can see here, there's not really much energy in it, is there? Yeah? Where ultimately we get this purge higher, taking out that higher. Now, when we take out that low, look at the energy in this movement, right? When I talk about displacement, right? When I talk about energetic moves, leaving fair value gaps, this move down, let me just get rid of this for a second to clean it up, right? So we've purged liquidity above this higher, then we have that impulse move lower, right? And what happens? When we're reviewing the move, we want to see displacement, right? It shows us that the sellers have stepped in, right? And that fair value gap ultimately becomes a trigger for our entry with our stop losses above here. And we ultimately target liquidity left at the immediate lows. And then ultimately this one, which was our high time frame low. All right. So in terms of this with Avax, I think we're in a similar situation. I'll be watching this level at 13.955. If we do get an inner range kind of reaction here, we might just be purging higher to then drop further down. So do be cautious about that. Ultimately, I'd like to see this low here run. Yeah. If we do reverse here, right, without taking liquidity down there, it could be the case that on the higher time frame, right, we're setting higher high, higher low, and the safest bet would be to try and look for your trades here, right, when we reclaim this high. Okay, guys, so OKB. I don't think I've traded that before, guys. OKB USDT. Have we got a perpetual futures one? Let's have a look. OKG. OKB, isn't it? So okay, so no perpetual futures one. Let's have a look. OKB on OKB USD. Why not? Let's take a look at the OKX charts, shall we? OKB. Perfect. Be a nice clean chart for us, guys. Guys, do ask any questions and bits and pieces you've got in the comments if there's anything that's of use. Do feel like I rattle on sometimes, but I just want to make sure that I really get the context across to you guys. I know it certainly made a big difference to me when I was starting out. Here we go. Didn't think it wanted to do that. OKX exchange coin, of course it is burned, really highlighting how terrible I am with stuff like that. Simple price action traders like me, you can often just remove the ticker. Uh, and then it's mainly about the charts. But no, I'm very blessed to have such a good team around me at the Bird Nest, fundamental traders, everything, always teaching me about stuff. Julian and Milky, legends that they are. So this is interesting. I don't often use them. Well, I do use them, but for me, it really has to have some context, right? So if I was using a line of best fit here, then you'd have to kind of go through that a little bit, really, to tag that in there. Now, when you're using these lines, guys, do make sure you do research in terms of how you fit. And what I mean by that is not being patronising, but in terms of just make sure you're consistent. If you're only allowing it to be anchored to the wicks, then make sure you only allow it to be anchored to the wicks. If you're allowing it to penetrate the wicks and go to the bodies, then make sure you stick with that. Tone Vase, actually, who I was really, really fortunate to learn a lot from in the early years. I know he's very much a Bitcoin maxi and stuff. But he's a very, very smart guy that understands technical analysis very, very well. Would always talk about consistency, right? So for me, I like to see it anchored to a wick, ideally, yeah. And then I'm happy for it to move through other wicks, but I don't want to see it. I don't want to set it going through bodies, right? Meaning that if I was back here setting this line, I wouldn't just set it like that, so it fits my narrative there because it meets a good point up there. It's penetrated straight through that body, right? What I want to see in terms of the early moves of that, right, is something like this. So if we zoom in, we can see here that it's respecting that body, yeah? So as we get it through here, we can see resistance, resistance, strong move through, support, support, support here, little deviation here, but again, the line isn't going to be perfect, right? So now this is an interesting point here, because if it manages to hold here, right, and then we can reclaim this high, what have we done? Well, market structure-wise, right, we're looking at it there, low, higher, 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 low, higher, higher. If this comes down and holds here, another higher, low. Ultimately, the breakout of this high here could have price reaching for liquidity above here. There is this fair value gap in here that will draw price as well. Let me draw that in a lot better than that. Actually draw that in. So this, on a daily scale, could be luring price higher. So what this does is this now plays into our context, right? As we look onto the lower time frames, we can say, okay, we're holding this SR level here. Is price ultimately looking to push up from here? In terms of a higher time frame range, we would kind of find ourselves between this and this right now. Okay, we can see here price deviates this, comes back down, doesn't reach the range lows, again deviates the mid-range, comes back down, tests the underside of the range low, of the mid-range, sorry, before ultimately getting driven a little bit lower. So we're underneath that at the moment. We're coming into a key support level. What are our plays? Well, I would be looking at that high and this low as the key things before we move down onto the lower time frames. Move back down onto here. Let's have a look. Come on, Trading View. There we go. So see how doing the lines, the support resistance lines on a higher time frame gives you a little bit of extra context when you go to the lower time frame, right? Because this all of a sudden looks really messy, this line, but we can see as we look back, you know, the key role that it's played comes into here. What are we looking for here, right? Okay, we've taken out the liquidity below these relative equal lows here, which is massive. We've held support of this line. We've come and set this high, higher low, ultimately breakout of this high here. Yeah. We can see what a key part that played. That's that high, low, high, higher, low, higher, higher, right? Breakout of that, price holds this, breaks above it again, retests it perfectly here and moves higher. So what do we get here? Something similar, right? Price comes in, takes out the low here, ultimately with that low. That low is then swept, right? Price comes back up, sets this high. So we've got low, higher, high, higher, low, closes above here, retests this, ultimately breaks down into here. And now we're kind of stuck in this move higher, right? So when we look at the reaction that price had here and that big expansive move higher, these previous reactions can tell us quite a lot, right? Same here, price comes down higher, breaks out above this high, retests it. And again, look at the big expansive move higher, right? Lots of energy. Now, when we get this one here, we faltered quite a lot, right? We came in, found support at the same level, failed to get that same energetic move higher. So is this starting to show a little bit of weakness here? That would be my concern. All right, so let's just clean this up. Now, ultimately, we've got our two levels here, our daily levels, right? Daily high, daily low. We're holding this level here. So what would we want to see from a bullish perspective? Well, if we continue to hold here, yeah, we recover this level, retest it here, get back into bullish structure. There might be some day trades for us in here. Yeah, when we break that structure into this level, we would have that as target one. Yeah, purely because we could see a reaction here, right? Very easy to see that price could deviate here, comes back under the range. Yeah, then if we break down here, then this would be our next trigger because, again, we've just come up here to purge liquidity. We're now back under this level. We see the breakdown of market structure, right? Where can we target? We've got these clean lows here. Obviously, if price does reject there, which would be our target one to the downside, and ultimately our target two would be there. Okay, so that's how I'd be looking to trade that at the moment. Anything on the much lower time frames, we'd purely be looking to fuel our trigger plan, right, for structure. We would still want to be focused on that high time frame move, in my opinion, because that's where liquidity is going to be resting. All right. So I hope that's been handy on that, guys. Let's have a look at what other ones we had. We had ETH and KAS. So let's go and have a quick look at ETH. ETH chart's probably going to be quite messy. Trading ETH quite a lot recently. I think I might have closed it up. Imran Khan, Bernd, you're very welcome, guys. I hope it's of use. So let's have a look what we've got on Ethereum. We're going to have to close all of this test data off, aren't we? Let's have a look. This is what happens when you just stay up all night testing stuff, guys. It all gets away from you and then it all becomes a little bit messy. So let's move that up to there. And then I think we can just save this lot as test data. So 523, there we go. Perfect. So ETH. Now this is a beauty to trade. There's obviously lots of volume, the real kind of big daddy next to Bitcoin, right? And you see on the 4 hour really that although we've had this retracement here, still very, very strong. I mean, we'll obviously look at that as we move down through the sort of medium to the lower time frames, but we're going to start our analysis here on the daily. Now, immediately when I look at a chart, hang on, I haven't got the bloody brush selected, then what stands out to me here are these upside wicks, yeah, and then these downside wicks. Yeah, can everybody see that? The same way here, right? Look at these upside wicks. You just grab a horizontal tool here, right? You try and find the kind of key area where they interact the most. Resistance, resistance, resistance. Yeah, ultimately couldn't get above purges lower. Why? To take out liquidity here from these untapped lows. See these here? Actually, highlight them, right? Liquidity resting there. What does price do? Comes back in with this move here to take out all that liquidity, moves higher, deviates this level again, comes down, almost a perfect underside retest. What does that then do? Comes to attack that liquidity there. Yeah. Again, second rejection. People get into their shorts late here. Yeah. Expecting price to move lower. What did we discuss on one of the previous charts quickly? The idea of balanced price ranges, which is where, or inverse fair value gaps, where we see the fair value gap here, in this case, a bullish fair value gap, a bearish one, sorry, be overtaken by a bullish one. Yeah. That can often signal a sign, that can sometimes signal a reversal. Obviously, we got that here as well, right? Now we failed to sustain this one, but you can see when price returned here, yeah, it was just breaking down. With this one, we got this big expansive move. That really didn't give people much chance to get on board. However, seeing that we kind of balanced that price range and then price had that expansive move above our key support resistance level would then, again, guys, sometimes we just need to make We just need to have patience here. Of course, we want to get in that move. But the real key thing here is to see when price recaptures this support resistance level. We get it hold here, and then we can get into our positions across there. All right. So on that scale, let me just clear some of these bits and bobs up. Right. What have we got? Well, now we're kind of looking at something a little bit similar. This is a bit messier, in truth. But something was kind of capping the market here. Yeah, because if we were to draw a line here, yeah, you would say, okay, look, resistance, resistance, resistance. Price breaks above, retests the area, goes back up. Price then comes back down. We get that reaction again. So just draw that in as an actual level here, say, for example. Right, where was it? It was roughly about there, right? Resistance, 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 support, 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 sells up, takes out liquidity above here. This gets a bit messy here. We kind of purge back below, and then we're holding below this level. But the fact that we've run these lows and price has now had this big expansion higher, I'd be looking here on a daily scale for this fair value gap to hold if I wanted to remain bullish. Yeah, because if price comes up, and let's look historically what it's done with this level. Price came up here, set this fair value gap. Price ultimately held this fair value gap here and then moved higher, right? That's the kind of thing you'd want to see from this one here on a daily scale, all right? If we move to a 4 hour, yeah, brilliant question there, Wack. We'll take a look at that in a second, mate. So now on a 4 hour, we've got even more context, right? So if price is indeed going to hold this, and we can refine this fair value gap, right? So again, that's why it's handy to label them up, right? FEG daily, so we know where that is. We've also got this fair value gap here on the 4 hour. Now, if we want to see this area hold here, what else can we look at? Well, we can take this fair value gap that we're coming down into and say, fine, we know we're now within this. We've rebalanced this, right? So that fair value gap isn't as relevant. However, what is the one that we've set above it. Yeah? So let me get rid of the daily one quickly. We know we're drawing down into that. That's now a bearish fair value gap. What do we want to see if we want to see some bullish continuation here on the higher time frames? Is on this time frame, we want to see this recaptured, right? Our market structure, ultimately, yeah, we'd be looking towards this high here, these highs here. But we'd want to see this recaptured, tested as support, lower time frames, look for our entries, all right? However, if this does nothing but offer rejection, yeah, we really can't get above that, and we see price start to break down, ultimately we know where we've got a key support level here. We want to see it hold. We've got this fair value gap here as well that can draw price lower. So we can move down onto the lower time frames and say to ourselves, right, in here, what have we got? Clean lows down here. We see these run, price fails to recover this and breaks back down below. That's where we can look for our triggers to short into this area here. Yeah. Ultimately, as we just discussed here, if we see this expansive move higher, price starts to hold here. Yeah, you want to see that purge on liquidity, really, a recovery of market structure. And then you've got these kind of preconditioned targets here. Look at these. Untapped high, untapped high. That would be the area we'd look to day trade into long there. All right, guys. Now, Wack brings up a really good point here. I don't always cover this on stream. It is something that I use. I don't kind of like to really kind of go over the top with information, try and kind of keep things simple for myself as much as anything. But let's just clear everything up from here. Right, actually, we can leave them on. It doesn't hurt, does it? Just get rid of this. So when we're looking back here, and this is where our session breaks come in handy, you can get in indicators for this as well, guys, like, you know, Monday's high, Monday's low. What Wack is talking about here is ETH broke below Monday's low earlier today. What are your thoughts? I'm waiting for a retest and breakdown to go short, or a break above, hold, and then go long. What do you think? I think it sounds like a really, really solid plan. So let's just take a very quick look at this before we close up the show on KAS, yeah, is I actually do like doing this on a slightly lower time frame, so you've got a bit more kind of in terms of the candles. Right, we're looking at this, right? We've got Sunday, Monday, right? Now, what you're looking for here right, is Monday's high and Monday's low, right? So if we draw these out, this becomes Monday's range, yeah? Once again, take our Fibonacci, draw in our midline, and this becomes Monday's range, all right? Now, this is something this is what I trade this a lot, right? And again, like any trade, what are we doing? We're waiting to see strength and weakness at key levels. We've got our range high, our range low, and our midline, right? Now, what I'm looking for here, and what Wack's talking about at the moment, is that we've now kind of lost Monday's low. We've had this little retest here. And now the question is this a deviation and price gets back in the range? Yeah. So if price deviates, if this does turn out to be a deviation, how will we know that? Well, price might wipe out those lows or take some liquidity, but ultimately it's going to get back in here, right? The failure to then get back below that and the break of market structure is what then allows us long triggers, first of all, into our range midline or EQ. If we hold here, yeah, then we're looking for the same thing again, but trading it up to the range highs, all right? So level to level as we go through with the plays. However, what Wack's talking about at the moment, and we're kind of getting what looks like that little breakdown right now, how would I play this? Well, we've kind of had the breakdown and we've now had the retest, right? So from here, we're then looking for confirmation that price is willing to go lower, yeah? So ultimately, this is the low that kind of concerns me a little bit, because I do think that we could see that, recover this, yeah, and ultimately make a move higher. So I would want to see something like this, looking to day trade this. I'd want to see a move lower and price really struggling to get back above. Then when you get that acceptance lower, yeah, and you lose that market structure, that's when you can look for the safer setups on a pullback to this area, targeting liquidity lower down. But again, when we split these things into ranges, right, and we look at that, we're purely looking at this from the point of liquidity. Yeah, Trader Dank tells this amazing story about Johnny and pizza. It's such a good story. I can't even retell it. I just recommend you just ask the dude about it. It's just hilarious, right? But the principle's this, right? With any range, if price has got the strength to break out of it and find acceptance, yeah, and what do I mean by acceptance? That there's buyers here, right? There's people willing to support this price. And that just means that people see this as value. People are like, no, look, this is going higher. I'm happy to buy this here because I think it's going to improve. And it works the same with anything: property, cars, watches, jewelry, etc., right? The idea is for investors, you're looking to buy an asset when it's value, yeah, and then you're looking to sell an asset when you think that it's reached its peak value and when you think you can then buy it back cheaper. So for here, for example, if this is really starting to hold and you get this structure coming up, then boom, it gives you the idea that price has been accepted here. And then it's looking for buyers higher up, yeah? And then you're looking for sellers to sell your product to at a higher price, right? Ultimately, the reverse of that is true. Yeah, if we go up there, we deviate, we come back in the range and we can't get out, then what's that telling us? That's telling us that there's weakness there, right? That's telling us that the deviation here, was too much. Price couldn't get acceptance above that level. And then ultimately, it needs to find acceptance lower down where there were buyers previously, all right? And that's just the nature of how markets live and breathe. Ranges help us break that down into actionable setups and plays, all right? So I hope that's helpful, guys. But yeah, I'd be watching that level there, Wack. I think if we run that and start to recover, get back in the range here, I think we're probably long into the mids. Hold down below that, I think we're targeting down here around kind of 18.22, or at worst, those kind of relative equal lows down there, which is about 1835.8. All right, buddy. So just to close up, I know we've run over a little bit here, but I did want to kind of get it in for you guys. I wasn't here on Monday, and I know we've had a few weeks where it's just been one session. So no problem running this one a little bit longer. Let's look at KAS. You are on the right track indeed, mate. Very much so. great to see how much you've been coming along this year, bud. And like anything, guys, when you're looking at these things, don't try and take on everything from everyone. I'm not saying just listen to me. Please don't just listen to me. Go and find other high quality, well, I'm not calling myself high quality, not saying I am, but go and find high quality traders, right? People that have got a track record. And find out what kind of trading suits you. Like Wax really kind of finding his place at the moment, understanding the daily moves, looking to day trade and stuff, and putting that time in. If you don't have that, and you've got, you're not able to bring day trading time, make sure you're trading and that you're looking at swing trading methods, right, or position trading, or investment, or even automated trading systems like the legendary Pedma 7 on Twitter. Unbelievable system builder that I got a pleasure of working with. So before I digress too much, let's see if we can smash this out in 5 minutes. KAS. No perpetual. So who did we choose last time? We did that. So KAS USD. Let's go on KuCoin. Why not? So KAS, super quick, top down. Let's see what we have got. Quick sip of some very cold tea. Here we go. Let's get this on a daily. Coming on the 15, you can really see some sort of gapping on here, which is natural for the kind of smaller caps, or any kind of like illiquid or less liquid asset. Here we go. So obviously for certain assets like this, where you haven't got a lot of price history, which is fine, you can only work with what you've got. So straight away, you kind of see this level here for me, which looks pretty key. Maybe it's not so much of a line, obviously, be more of like a little bit of a box, but something like that, I would say, could take it down to those wicks if you want, but it's just such a broad area. Something like that, right? Support, lose it, resistance, yeah? There's pretty much as much kind of price history you've got there. So that's our kind of key SR, kind of pivot point area that we'd be looking for a reclaim to push higher. In terms of lows, on a daily scale, this is what we're looking at here. Right, so we can see price set this low. That's where liquidity is resting below there. Ultimately, this is where liquidity is resting above this high on a daily scale. So we've got those key levels marked out. We move to a 4 hour. Let's get a little bit more information on how price has been moving. Just get those session breaks off for a minute. So quite a clean rejection there. Not really sure what's supporting price here. Would have been looking towards this kind of internal low. Excuse me. So I'm going to draw that across a little bit further, because if that does get reclaimed from there and then price gets into a bullish structure, I don't see why we wouldn't start targeting like these highs here, right? Price typically, it doesn't very often kind of stop just in the middle of nowhere, right? It's often looking for those key liquidities, right, which is going to be above that high. And that move down is pretty fast, right? So it could look to retrace some of that before ultimately moving lower. However, realistically, the kind of draw on liquidity down here, we've got our 4 hour fair value gap, which is an area that I'd be looking at here for price to come down. Ultimately, if we get down into this, I think if we start to recover here, yeah, that won't be as relevant at that point. I think we could look then to kind of take this leg here, the last down leg. Let's just say, for example, we come into the fair value gap a little bit into here, but don't run that low. I still would really, really fancy us taking that low, So maybe we do something like this, yeah? Say price kind of comes down into here. Then what I'd be looking for price to come into is this fair value gap here, which is up in premium, yeah? Because then ultimately, if we start to break down here, then on the break of structure here, I'd be looking for price to purge lower, first of all, taking out that low and then coming down into this, all right? Now, oh God, hang on. Done that really annoying thing, haven't I, where I pressed my space bar. I don't know if there's a way to disable that. I'm not particularly technically minded, but that is such a pain in the backside. I don't know why your spacebar either would just make you randomly jump a couple of assets. It does seem to be a little bit random, but my fault for hitting it. But guys, the amount of times I do it on live stream. So let's just wait for that to reload very quickly, and then we're going to kind of just look. Trading View really struggling today. Definitely not the internet, because there is an insanely fast amount coming in through fiber. Maybe it just doesn't seem to like the small caps. But I mean, anyway, regardless, we can talk about it while hopefully that starts to reload. Ultimately, we're looking for key liquidity to be swept, right? That's the area as kind of a reversal trader and a range and level to level trader. That's where the kind of bread and butter is. So we can see here, if we get that kind of move here up into premium, we can target these areas. Why am I looking at fair value gaps? Because I'm looking for points of interest, right? What you'll notice is that price tends to react at these fair value gaps, right? Or order blocks. And again, just don't take my word for it. Go out and study it, right? Study absolutely obsessively, right? Look at this. Bullish fair value gap, right? In this expansion higher, this bad boy is down in discount, yeah, from this leg here to here, or even from that leg to there, maybe not quite. But let's take this expansion leg here, right? And then we're looking at this fair value gap to support price. Well, did it do that? No. What happened? Lost it, cut through it like a knife through butter, retested it as resistance. So then we can hunt around in here, right, for those short triggers. And in fact, it's probably quite a good point to finish on that, right, to just show you some triggers very quickly. We've taken out this key low, no real reaction there, right? Yeah, if we do recover that, I expect it to come back up here into premium. But ultimately, I do think that the lows down here are going to be really, really tempting for price. When we get down there, that's another story. We also need to get through this fair value gap, right? So we would also be looking at that. Now, when we looked at this fair value gap here, and we would look to and say, okay, if price is going to retain bullishness, it's going to come down, hopefully retest this, yeah, also the order blocks that is in here, hold this area and then push above, right? So what can we do? We can drop it down onto a lower time frame, and then we're looking for our structure. Now, I'll do this on a 15-minute for you guys. Ultimately, I use the 15-minute for levels, fair value gaps and that, but I'm ultimately looking to execute on a 5-minute chart or lower. So what can this tell us? First of all, we've got the liquidity stacking up here. Yeah, we can see low, higher low, higher low, higher low. What happens? We lose that, right? So let me just get rid of that very quickly. What have we got down here? Untapped liquidity, untapped liquidity, untapped liquidity, right? So that's where we expect price to come down to take. And then ultimately this low here, and then our high time frame low over here, yeah? So that becomes our ultimate target. Now, we don't need to FOMO into anything. All we're doing is we're looking for our same systems, our same setups, right? We want to see our sweep. Then we want to see an impulse move lower, leaving a fair value gap here that price can retrace into to go lower. Do we get it? No, we don't, right? We didn't get the move. We then set these relative equal lows here and here, right? So then what would we look for? We can look for the same. We can then look for the secondary breakdown, which is when we lose this low. Now, price loses this low, yeah, comes back down. What ultimately happens, remember, we've got our key target here. Just because price gets to here, we don't think our price is just going to magically reverse here, yeah? We don't. We're saying to ourselves, look, this is our theory all the way through. We ran this low, theory was correct, but we didn't get the retrace to the fair value gap. Maybe you want to use a different entry method, no problem. You can use a close below this low, yeah, meaning that you would have taken a short position on this candle here, get the close, wait for this line to be retested, right? Stops just a little bit above there, and then ultimately the target down there. And lovely 2R trade with a great percentage, very, very low fees, right? That's not how I trade it. Yeah, I don't like this. It tends to kind of mess up the risk to reward a little bit for me. So if I'm looking for the secondary breakdown here, I want to see that level. I need to see this low intact. If we'd run this low, I wouldn't then look for that to go down because this is the magnet, right? This is what's drawing price. So what happens here? We ultimately get this move lower, yeah? Now this is our displacement leg. So we would take this. Yeah, price holds here. What do we get? Price comes up here with this beautiful wick into our fair value gap in here. We're only interested in the part of the fair value gap that's in premium, right? So if I just draw that out for you. Yeah. So it's kind of drawn it the wrong way around. Hang on, because we want to draw that from low to high in order to get the colors right. Yeah, so we want to be short from premium, which is the red box at the top. This is our fair value gap in premium. Price triggers here. We take our short position, yeah, from the mid, which is there. Yeah, so that's the part of that fair value gap that's in the red box. We don't make an allowance for the part that's in the green. We then put our stops a few pips above the swing high, which is here. Yeah. And then we target down here. All right. 2.44R. So if we miss our initial entry, our liquidity target doesn't change, just gives us the opportunity to kind of step into that. Another entry that you can have, which is something people ask me about a lot, it's the breaker block. Yeah. So when you see a purge on liquidity, which we get here, yeah, we're looking for the last down candle before price moved higher. I personally allow for the bodies on these. I know that's not traditionally how ICT teaches it. Certainly, I always recommend always go to the source of the educator if it's something you want to learn in that respect. A lot of people, myself included, take techniques off a lot of different traders to build their own systems over the years. So that's your breaker. The down candle before the purge on liquidity, you wait for price to close below it. Your entry goes on the low side of the breaker. Yeah. And this one would have actually been quite nice here. I think we would have got a decent risk to reward. Just a little bit above there. Yeah, and ultimately the best one of all of them, almost 3R. However, make sure that you're consistent. All right, guys. Don't all of a sudden pick an entry and be like, I would have taken a breaker there because the fair value gap didn't retrace, right? Well, what if on other things when you're testing it, what if the breaker didn't retrace to the breaker and the fair value gap would have got you a much better risk to reward? So, like with anything, consistency is key. All right, guys. Look, I know it's been a really long one today. Wanted to kind of give a little bit more and kind of cover them. I hope it's been helpful for people. If you have managed to stay around on the stream, really do appreciate all of your time. We managed to keep some decent viewing numbers. Consider it was an hour and 22. Working with my dear friend QBS on getting some live trading sessions together for you guys going into and looking at target in New York. So I think that would be a really, really cool thing to do as well. One final thing to say, remember there's a few key news drivers coming up this week as well. Make sure you get onto like a financial juice or something like that. Yakuza, you're very welcome, buddy. And yeah, just reach out if you've got any questions on Twitter. Remember, you can come and get a free trial for the Nest. You can find the information in the link below. If you can't, just hit me a message and I'll send it over. And if you want to get the trading team's call for free, you can do so by just depositing $100 minimum on Bybit. You get free calls for a month. All right, guys. Look, wishing you all a fantastic week ahead. Please do trade safe, trade smart. And remember to just spend as much time as you can educating yourselves. Yeah. If you're going to open positions in the market, do it really, really small size. Just get a feel for it. Learn your trade. And yeah, if you've got any questions, don't hesitate to reach out. Wishing everybody a fantastic week ahead. I look forward to catching you, and I will be here on Monday. Take care, guys.